A three-fund portfolio. This is where you invest in three diversified asset classes, and that makes up your portfolio, so your pool of assets. And coming from a girl in wealth management, this is a simple yet very effective way to invest. Hi everyone, it's your investing coach Wahida here. Welcome back. This is where you can learn how to invest and build generational wealth, even if you're the first person in your family to do so. Okay, let's break down the three-fund portfolio. The three-fund portfolio was made popular by Bogleheads. They're a group of investors like me who were inspired by Vanguard's founder, John Bogle, and how he revolutionized investing for the masses. And yes, John Bogle is still one of the few white men I will listen to. Unfortunately, he did pass away in 2019, and he was a person who created the first index fund in the 1970s. So this brought the ability to invest to everyday people in the US. So now gone are the times where you had to rely on like a fund manager where there were high fees and where they may have high minimums for you to even come and invest with them, right? So now the middleman is gone, and you can now invest with as little as like $10. Index funds have truly changed the game in investing. So now it can include everyone and not just the already well off. All right, let me get off my soapbox, and get back to talking about the three-fund portfolio. So the three-fund portfolio has us investing in three asset classes. These asset classes are the US stocks, the US bonds, and international stocks. This is a very popular strategy because it's simple, yet it's proven to have a better long-term return than actively investing by picking like single stocks and trying to time the market. So truly, this strategy lets you, for the most part, set it and forget it. When it comes to investing for your retirement, really, you only need to look into your portfolio a few times a year to do a rebalance, make sure everything looks good. But truly, once you have an automatic system in place for your investments, the maintenance of your account should only take a few hours a year. Like, yes, you heard that right, like only a few hours a year. So let's get these systems in place so we can set it and forget it. There are different platforms where you can invest, such as Vanguard, Fidelity, Schwab. You can't go wrong with picking any of these platforms. Y'all just pick one and get to investing. Here you can see that I broke down the different index funds associated with the different asset classes that you can get either at Vanguard or Fidelity. But yeah, let's break down what we're looking at. For Fidelity, we have the ticker symbol FZROX, and on Vanguard's side, we have VTI. These are index funds and exchange traded funds tracking the entire US market. So you don't have to worry about trying to pick single stocks. You can just buy all of them, right? So both funds invest in over 2,500 companies. And of course, this will include the largest companies in the US, such as like Apple, Microsoft, Amazon, your Google, all of those. Okay. So for international stocks, we have Fidelity's ticker, the FZILX, the Fidelity Zero International Index Fund. And for Vanguard, we have VTIAX, the Vanguard Total International Stock Index Fund Admiral shares. So as you can see here, for the VTIAX, this fund will be investing in countries such as Japan, the UK, China, France, Switzerland, India, and even, as you can see here, Malaysia, where my family is from. And you can see the full list of countries here in this video. As you can see here, it's very similar to Fidelity's FZILX, the Fidelity Zero International Index Fund as well. You can see the list of countries that this fund would be invested in. So pretty similar stuff. Okay, so the third asset class are bonds. So Fidelity, we have the ticker VXNAX. This is the Fidelity US Bond Index Fund. And the equivalent for Vanguard is the ticker BND, the Vanguard Total Bond Market ETF. So the bond funds are similar to stock funds because they invest in a diverse selection of investments. But within the bonds, they hold more fixed income securities instead of like stocks. So you can see that here. And that's essentially why bonds are seen as safer investments. And you can see from the portfolio's investment type that both bond funds are pretty similar. So as we chatted about the three asset classes and what they are at both Vanguard and Fidelity, really you can't go wrong with picking either platforms. Honestly, if you have an account already at either one of these spots, like use that platform to open up the other accounts you're needing, right? So if you have a 401k already at Fidelity or Schwab or Vanguard, use that as your platform, whichever. Pick one, move on, like let's get investing. Because that's the important part, right? Like that we are investing. Personally, I use Fidelity compared to Vanguard. I feel like Fidelity has like a lower barrier of entry with little to no minimums when investing. But again, that's a small preference. And if you want to open a Fidelity account, you can use my referral link here that I'll put in the description. I do get compensated if you use it. This allows me to make more free content for you guys though. So I hope you do enjoy it. All right, everyone, thank you so much for joining me today for another educational video. These videos really are all about learning and gaining confidence as an investor. But what it's not is financial advice, right? So if we're wanting financial advice, this is where we go to planners and advisors, as where we can chat with them on a case-by-case basis. Again, thank you again for joining me and soaking up this wisdom with me as we build generational wealth. Join me next week for a new and great video. Thanks so much, everyone. Bye.